So what they did is they're saying they're increasing how much money it is to borrow money. Welcome back, Hustle Family. Bing. So, first of all, a quick house update. It should be finished in the next 2 weeks, so Giselle will finally be smiling, and you can see the office, and we'll be doing videos there, and seeing like some posters and new stuff that we got. But anyway, now back to the video. Today's going to be a gem dropper. This is a market update. What the
is happening?
I hope I'm gonna that is going on with the real estate market right now. If you're watching and you're a loan officer or you're a realtor or you're looking to buy a house, please watch this video. This is for you. Okay. Yep. So if you didn't know, last week the feds announced a rate hike. So what they did is they're saying they're increasing how much money it is to borrow money. I'm a little confusing.
How much money it costs to borrow money?
Yes, they're trying to increase it. They're trying to increase how much it costs people to borrow money. Oh. So the way they did that is the central bank, which the feds control, they're offering higher rates for the major banks like Chase, Citibank, to put their money with the central bank.
Okay.
So the feds said, hey, what they do is they said, hey, I'll pay you. I think they did it by, it was 1.75 basis points or something like that, or 0.175 extra on top of whatever they normally give.
Wow.
So what does that do to the banks? Now, if I have a bank and let's say I have $100,000, they're like, wait, the central bank is guaranteeing me better interest rates to park my money with them, right? So more people, more banks are wanting to give their money to the feds, the central bank. What does this do to the consumers? If the banks are putting their money away in a savings, they have less money to invest and to lend.
Oh.
So in your thoughts, you're like, wait, how is this? Why are they doing this? What's going on? So now the banks are going to say, hey, if you want a loan for a car, if you want a loan for a house, they're thinking now, does it make sense for me to borrow this, to loan this money and have a high risk of not getting my money back because if it defaults, or does it make more sense for me to put it somewhere where I know I'm guaranteed this interest rate, guaranteed this money? So the banks are
risk
weighing
versus reward.
Exactly, they're weighing their options. Now, what does that mean for the consumer? It means if you're going to a bank to get a loan or get anything like that, they're going to have to charge you more
to compensate what they're losing.
Exactly. You understand? This is economics, guys. This is economics 101. On page, maybe 102. Might be a little more than the basic. So now the banks are like, hey, I'll loan it to you, but now I'm charging you more because of what I could be losing. Now the risk is higher and my reward has to be higher. Higher risk, higher reward, right? So the banks are charging more now. So you have the central bank who holds other banks' money, like major banks. They put their money there, they get their rate. And now the little banks, or we'll call them Chase, Citibank, Wells Fargo, those banks, they're raising how much they charge their consumers to borrow money. For this is business loans, any type of money, business loans, home loans, any type of money of them giving to you, they're increasing their rates.
Okay.
Now, what does this happen to the consumer now? Now, consumers have to think about, does this make sense for me to spend this, to get this, because it's costing me more? So what happens when consumers stop spending?
Recessions?
Something, but when consumers stop spending as much money buying clothes, buying houses, stuff like that, the economy takes a break because it's supply and demand.
Isn't that a recession?
Yes, but they're trying to stop a recession. So the way they do this is, right now, inflation is high, so everything is going for a lot more. You try to buy an apple, it's going for $4, right? And people are buying it because they're getting money such at a low rate. They're like, hey, okay, whatever, I'll just borrow the money, I'll take it from a credit card, I'll take a loan out, and it's more people buying than this product. But now, if they raise how much it is to borrow the money,
there's going to be more product and there are people to buy.
Exactly. So what happens to the economy?
What?
They slow it down. Because now, if you're selling a product, you can't sell for as high because you have more product and less consumers. So you have to lower your prices so people can buy it.
again.
So they're trying to find a new equilibrium.
Oh, got it.
And that's your real estate market update.
Thank
Like that?
you, Mr. Marcelle.
Hopefully that made sense. If you have questions, put it in the comment section and I'll redo another video because it was a confusing concept. I tried to break it down. Simplify it as much as possible.
Yeah.
So the same thing is going to happen in the real estate market. Comment part 2 and I'll do a part 2 and correlate this to buying houses and real estate. That's what we talk about.
Thank you, sir.
You're more than welcome.
All right.
Over and out.